Hello traders, welcome on a daily analytical report with Alpari. My name is Tomasz Wiśniewski and I'm a chief analyst in Alpari Research and Analysis. We have 14th of December and finally we have an FOMC decision about interest rates. Interest rates, as I will show you now, interest rates decision is we're expecting rates to go up. We're expecting Fed to hike the rates. As you can see, 91% probability of this kind of action. But what the market is also anticipating is Fed's economic projections and dot plot. So we will find out what are Fed's FOMC projections about the forthcoming year. What are they thinking? How many rate hikes should we have in 2017? And many traders are anticipating what's going to happen. Many traders, not me. Why is that? Because I remember last year. When we expected 3-4 rate hikes in 2016, and that was the base scenario at the beginning of 2016, at the end of 2015, and we know what happened, right? We don't have any hike in 2016 so far. We should have the first one today, but for a few months. For a few months, almost everybody was certain that we will have 2, 3, or maybe even 4 rate hikes in 2016. It didn't happen, so in my opinion, those dot plots and economic projections are just useless. All those estimations by big banks, hedge funds, etc., it mostly do not happen, right? So I wouldn't waste your time to think how many rates hikes should we have in 2017 because there's a higher probability that it won't, this what those banks and projections say, that it won't happen. So why should you bother with that? But okay. Some experts, analysts, etc., they have to write analysis about that, so they're writing about those economic projections, but in my opinion, it's just pointless. From the fundamental point of view, let me show you the calendar before the FOMC decision, before Fed interest rate decision, FOMC press conference. What we have is retail sales from United States, so also very important data, which will be in an hour and 25 minutes. Remember that this week is packed with central banks, because we will have also Bank of England tomorrow. Other minor banks like Russian bank interest rate decision. We'll have Bank of Japan next week. So many central banks are deciding about interest rates. Also, as you can see, Bank of SNB, Swiss National Bank, on Thursday as well, the same day as Bank of England. So this week is packed with central banks. And if Fed will start to hike interest rates, it will be very interesting to see what other banks should do in this case. We will start analyzing charts with oil, with WTI. So before I'm gonna show you the chart, a bit of fundamentals. Everybody knows that we are under influence of OPEC agreement on Saturday and Sunday, that non-OPEC countries will also commit to this cut. But we get some rumors that Iraq won't commit to that because they won't be able to cut the output. Also, we got data from API yesterday. We got expanding US crude stockpiles, inventories rose by 4.68 million barrels last week, which was a trigger for take profit action on oil. So now let me show you the WTI, where we do have this correction movement. So far, yes. So far, we still do have an uptrend here, because we have a sequence, especially from the middle of November. We do have a sequence of higher highs and higher lows, as you can see all the time. Also, we are still above 23.6 Fibonacci level, so uptrend is still safe here. Uptrend in the midterm, because obviously in the long term, oil is in the downtrend. What we are having today, and we had yesterday, is a very technical movement of gap closing, right? So there was a bullish gap here on Monday after those news that also non-OPEC countries will commit to this cut. So we had the gap, and it's almost always, it happens very often. It would be too much to say it's almost always, but very, very often happens. Like if there's a gap, later on the price closes it. And that's what's happening on WTI. Also, as you can see, so the price is aiming the Friday close here, which is exactly on a horizontal support as well. On a horizontal support, which for a long time was a resistance. As you can see, areas around 52.3, 52 were a strong resistance for a few weeks. It got broken with a gap, and now price should test this level as a support. Also, along with a horizontal support, what we do have here is 23.6 Fibonacci level, and also potential correction equality movement. So even if I'm not a fan of oil, as you can see here from the price action point of view, I cannot ignore the price action signals, because it would be just unprofessional from my side. As a trader, you should have open mind, and even if you think that in the long term something has no sense and the price should go the other day, you should always follow the price action signals and do not ignore them, because then you change from the trader into economic advisor or something, and you shouldn't be do that, because traders make money, not economists. Okay, so price is giving us signals that sooner or later we should check in on $52.3 per barrel, and after that we should see an upswing. But wait for the first signs of the trend reversal here. So, for example, a hammer or a bullish engulfing. Once you're gonna get that, and it will happen on a support, fair enough, you can think about opening long position. DAX, very interesting situation on DAX, because indexes are having their, well, especially in United States, and yearly all-time highs. Most indexes are advancing higher, Dow Jones 20,000, etc., etc. But also indexes in Europe, they also look good. What do we have here is a very similar situation. Look at that. Those yellow rectangles, head and shoulder formation, left shoulder, head and right shoulder, but we always tell our traders that you shouldn't go only with this formation. You should always wait for the breakout, because, well, here it's only a formation, if it's a potential. There is a potential that the price will break the lower line, the neckline, but you shouldn't open long position if it's not happening. So here If you waited, if you hesitated here a little bit, yes, fair enough. That was a good decision. Here also, head and shoulder formation, left shoulder, head and right shoulder, and don't open short position yet because it's not active. According to technical analysis, this position is not active yet. It will be active once we will have a breakout of this horizontal support here, but still it will be just a short-term sell signal. Because why? Because the trend, the long-term trend is positive, it's an uptrend. And to switch that for a downtrend, it can take weeks. Also, recently I wrote a report of Deutsche Bank how different types of assets can react on different FOMC statements. So there is a hawkish hike, there is a dovish hike, and there is a no hike. So different assets like dollar should go up, down, and remain calm, right? So there were equities, and in all scenarios, Deutsche Bank estimated that equities will go up, which may be funny, but if you would look on the recent performance of stocks, indexes, equities during recent FOMC rates decision, you would see that they always were going up. So even if there was a dovish statement, hawkish statement, it doesn't really matter. At the end of the day, stocks were just pushing higher. So why shouldn't we see this kind of an action again here? Especially those American stocks. Okay, that was DAX, that was WTI oil. Let me show you some Forex market. Let's start with American dollar to Canadian dollar. And here you know that we are very bearish for a long time, and the price is actually advancing lower. As you can see, we have new lows. On H4 chart. Yes, we are on the lowest levels since 19th of December. Why we draw the scenario of a possible upswing? Because it would be nice in the short term for the price to make a small correction, especially if we have a good place for that. And by good place, I mean the lower line of the flag and a potential correction equality movement. On a daily chart, we also got a hammer pin bar here. So everything looked good for a correction. But also we were stating that the trend is very strong here, and in the long term and in the midterm it should be continued, and we wouldn't be surprised if the price was making lower lows and lower lows again. As you can see, that short-term buy signal wasn't enough to stop the downswing, and now the price is trying to break this lower line of the flag. Fair enough, that's what should happen on this pair according to the technical analysis, and that's what's happening. For us as Forex traders, it doesn't really matter if the price will come down 360 pips lower now, or and the next week or the week after next. As long as you have this position and you're protected with a stop loss order, you should be just fine. Okay, how does euro dollar look like? So this bullish engulfing that we are talking about recently, as you can see, a candle from Monday covers entirely candle from Friday. This is a bullish engulfing. Bullish engulfing, as you can see, is happening on a long-term horizontal support. So from the technical point of view, this is a buy signal. But obviously, when you have an FOMC, technical analysis steps aside. The market does what algorithmic trading tell the market to do, what expert advisors are trading right now. So technical analysis steps a little bit on the side, so we just have to wait for the FOMC rate decision statement, press conference, and economic projections. But from the technical point of view, this looks like a long position here. Gold. Gold is continuing with the downtrend, stopped, well, not stopped, but paused from time to time with a nice trend correction patterns. This one is also a trend correction pattern so far. Maybe let me highlight it like that. That's a pennant. But maybe it's enough, and we should think about upswing here, but not yet. We don't have any signals of a potential upswing whatsoever. Don't even think about opening long positions, because they have absolutely no sense. They make no sense right now. No price action buy, no price action bullish signals whatsoever. But once we would get here, or maybe even higher here, that can be a trigger for opening long positions. Not before that. Next instrument I would like to show you is euro to Canadian dollar. Here on a daily chart, we are telling you about long-term selling opportunity, right? Why is that? Left shoulder head, right shoulder, breakout of a 50% Fibonacci level, which in the same time is a neckline here, and potential correction equality movement and a movement to the trend line, right? So there are high chances that we'll see for 100 pips downswing, but what we were thinking is it can happen straight away or after a small correction. So far market is very flat, so I think they are trying to use this correction path and then perform the downswing. But this is a decent long-term selling opportunity. Also keep in mind it's euro to Canadian dollar, so this pair won't be influenced so much by FOMC as, for example, euro dollar. Euro to British pound. Here, this support was very nice. We spotted that recently. Then a nice upswing from the support, and then we got an upswing again. Unfortunately, it's not a beautiful hammer. It's still a pin bar. So from the price action point of view, this candlestick is relevant. But the upswing could be much bigger. I would say that breaking this resistance will trigger a buy signal here. Before that, not so much. Cable to American dollar still trading higher. Apparently, fears about hard Brexit are no longer on the table, so traders are thinking about 2 years of negotiations and maybe a nice deal, and maybe this Brexit won't be even an issue, etc., etc. That is causing the climate around the British pound to be nice and warm, and as a result, pound does not want to go lower. But from the technical point of view, we are still on a trend continuation pattern. So unless we will have a breakout of the upper line of the flag, we should see a breakout of the lower line of the flag, which is more probable at the moment. Silver. As we said before, silver is behaving much better than gold. Recently, you can see that now as well. Gold to silver ratio. Maybe let me show you gold to silver ratio. Just a second, please. Just give me a second. I have it. So here is gold to silver ratio, and as you can see, 2016 silver, we started with a strong gold against the silver, but we're heading to the yearly lows, as if we will be able to see yearly chart, we are almost near the November lows. If we're gonna break it, we will be next to September lows, and then road will be opened to July's lows. So silver against gold is much stronger than gold, as you can see even here. Australian dollar to Canadian dollar, this highlighted here is a false breakout in our opinion. So from this point also, apart from the false breakout, what we do have here is a breakout from 61.8 Fibonacci, and also from the horizontal support here. So there are high chances that we will have a continuation here of this movement, and actually the false breakout will do what false breakouts usually do. So they will give a signal for a movement in the opposite direction. What do we have here? Another instrument prepared for this webinar is New Zealand dollar to Swiss franc, which I was telling you about yesterday. Again, it's a daily chart. Well, on a daily chart, situation didn't change much for the last time. I'm sorry, we have some problems. We had some problems with the voice, but now it should be alright. So New Zealand dollar to Swiss franc, we're having ascending triangle formation here with a breakout of the resistance here, and it's a long-term situation. So this price didn't change much. Obviously, FOMC markets before FOMC are usually muted. Not much going on the markets, but we should see some volatility after the statement, and technical analysis is giving us positive bullish signs here. Euro to Australian dollar. The pressure on this lower line of the rectangle, this is a rectangle formation, which is a trend continuation pattern. Trend here is negative, so from the price action point of view, from the technical point of view, we should see a bearish breakout here. The chances for the breakout are high. If you believe in that, you can open a position now. If you don't, you can think about sell stop order. But the movement here to this support, 300 pips movement to this long-term support, seems reasonable, seems very possible. And is supported by, widely supported by recent price action. Australian dollar to American dollar, we should finally see a breakout. We should finally see a bullish breakout here, because at this resistance 38.2 Fibonacci level, also along with a psychological barrier of 0.75, were under the pressure for too long. We defended at once, twice, 3 times, 4, 5, 6, then a breakout, breakout, and finally we should see a breakout here. But don't go for it now, as we still can defend the higher line of the wedge formation. But once the daily price will close above this resistance here, the last one that sellers can think of, 0.7520, if the price will close above this level, you can think about resistance here, about buying Australian dollar against American dollar here. So far it's still bearish price action, but those resistances are under huge buying pressure, and it looks like they won't hold for long. Last instrument I have for you is American dollar to Japanese yen, where we went to a very important resistance here, created by lows from 2014 December, 2015 January, then 2015 August, then 2016 January, and after the breakout it's our first test with this resistance. How test went? Shooting star, so a candle with a body on the bottom and a long head. This is test positive for sellers, but I would say that it's not the last word from buyers, and they can still go higher. They are still above midterm support here. As long as the price is above this support, the buy option is still on the table. Also, we do have a trend line. As long as the price is above this trend line, buy option is still on the table. Also, maybe price will make the same correction movements. Let's try to estimate how deep we can go. So we can go here, or maybe we will repeat this correction. Sorry. So here, possible supports from this technique are located here or here. So we still can go lower. We have few important supports because we also do have a horizontal support here, and a trend line a little bit lower. Right, so we do have a trend line, correction equality movement, and another correction here. So 4 important and very possible supports on the way to the bearish downswing. So far it looks positive, even with the daily candlestick like that on the resistance. But remember that price likes to test level 2 times, 3 times before the reversal. That was just the first time, so we can assume that we'll try to test it for 1 more time. Okay, thank you very much, guys. Remember that trading and investment in financial markets involves an element of risk. Thank you very much for watching. Remember to protect your capital, use money management and risk management rules, and follow us on Twitter and alpari.news. Thanks very much and goodbye.